This is the Net Group Investments podcast, where we explore a variety of views and insights that investors care about. Hello, I'm Tumisho Grate from Net Group Investments Multi-Management. This installment of your market and economic wrap is titled Rand Knocked Off Its Pedestal as US Dollar Rises on Possible Trump Presidency. The Rand was knocked off its firmer footing at the start of this week as the US dollar rallied after an assassination attempt against former President and current Republican candidate Donald Trump at a rally over the weekend. Now, the increase was indicative of markets betting that Trump will win a second term as President of the United States, while also reflecting risk aversion in the markets amid heightened security fears. The local unit had been strengthening since the end of April, reaching 17 Rand and 95 cents against the US dollar at the end of last week. However, by late trade yesterday, the Rand had weakened 1.5% to 18 Rand and 25 cents and falling the most in 3 months, while tracking losses seen in other emerging market currencies. With that said, it is possible that the dollar's rally could be short-lived and that the Rand may pick up steam again as market risk aversion works its way out of the system. The unsuccessful assassination attempt on former President Donald Trump had market participants betting that this could lead to big gains for the Republican presidential candidate at the polls in November. Under a Trump presidency, market analysts expect a more hawkish trade policy, less regulation, and looser climate change regulations. Investors also expect an extension of corporate and personal tax cuts expiring next year. This has fueled concerns about rising budget deficits under a Trump administration. The anticipated friendlier fiscal policies are expected to further spur a broadening out of the bull market that started to take shape last week. US small cap shares and banks led the gains in yesterday's trading session. This was reflected in the Russell 2000, which is a market index composed of 2,000 small cap companies. The index gained 1.8%, touching its highest level since 2022 and recording a fourth straight positive day. According to Goldman Sachs, a second Trump term could help small caps outperform given their strong record after a Trump victory in 2016. In economic data news, Asian Pacific markets mostly fell yesterday as China's GDP data missed expectations. China's Statistics Bureau announced that its economy grew 4.7% in the second quarter, missing expectations of a 5.1% expansion that was forecast by a Reuters poll. As China's retail sales for June also came in lower than expected, growing 2% year-on-year. This compared with expectations of a 3.3% rise. On the domestic front, the South African Reserve Bank Monetary Policy Committee will meet on Thursday to decide the repo rate. In May, rates were kept unchanged and the same is expected for July. With that said, the South African Municipal Workers Union signed a 1-year agreement granting a 7% wage increase for the water sector workers. This is effective from the 1st of July this year. Now, this deal represents about 160,000 of the nation's 300,000 municipal workers, and the above-inflation wage increases could pose a challenge for the National Treasury and the South African Reserve Bank by potentially straining the budget and contributing to sticky inflation, even more so through higher administrative costs in the water sector. Nonetheless, with moderating inflation, a rate cut could possibly still be on the cards for September. We've seen several European central banks cut rates, and market anticipates that the US Fed is also likely to cut rates in September. Although the SARB does not explicitly follow the US, the South African Reserve Bank does take the Rand exchange rate and other inflationary impacts of a potentially depreciating local currency into account. Now, all things being equal, the Rand would likely weaken if the South African Reserve Bank lowers rates and the US Fed does not. Yesterday, US Fed Chair Jerome Powell indicated that the central bank would not wait until inflation is down to the 2% target goal to begin lowering interest rates. Instead, the Fed is looking for greater confidence that inflation will in fact return to the 2% level. Still looking ahead to this week, the European Central Bank is expected to hold rates steady, with markets pricing an over 90% chance of no change. In terms of the Bank of England, although the central bank is not due to meet this week, the UK's June inflation data that is due on Wednesday will be critical to their decision on whether to cut rates or hold them in their August meeting. We have come to the end of our note. Until next time, do take care from the multi-management team. Nedgroup Collective Investments is an authorized collective investments scheme manager in terms of the Collective Investments Schemes Control Act. Nedgroup Investments does not provide advice on financial products and will only give you factual information. For further details on our funds and to view our terms and conditions, please visit nedgroupinvestments.co.za. Nedgroup Investments. See money differently.